let's welcome everybody again. We're just past midday. Thank you all for joining us. We are a couple of weeks away from 2025, and it's the perfect time to look ahead and gear up for what we see as kind of opportunities that are going to be coming up in 2025, as well as some of the challenges that we may see in our supply chain as well as our businesses. As the title suggests, today we want to really dive into diversification of your supply chain. We're going to focus on the strategic aspect and perspective on what to look out for, as well as actionable steps on effective diversification. I'm joined by John and Reza, both who are industry experts who have been around for a good number of years and have worked in large organizations as well as in smaller organizations, startups, and have been through it all. They've seen challenges coming in from a whole bunch of areas. So very, very excited to have such great guests today that are going to be helping me dissect this topic. So before we jump into the agenda, John, if you don't mind, maybe give us a quick overview of yourself and a little bit of your background work-wise, just so we can understand a little bit about who you are and what you bring to the party today.
Yeah, for sure. So I'm a 20-year veteran supply chain and logistics. I will at least say for the audience that supply chain took my hair, so that's the story behind that. I've kind of always been more on the logistics side, an operator. For as much as I love the ideas and concepts and all of these big things, actually getting it things done is kind of what drives me, and seeing the changes. I've been very fortunate through my career to be able to have a lot of responsibility, work with a lot of teams, and get sort of experience in different areas, and get into a lot of project management, continuous improvement, and stuff like that. So I left corporate maybe about a year and a half ago now to do my own thing. I begrudgingly will agree to consulting, but it's much more fractional and that closer tie and more intimate relationship that I definitely have with my clients. And I basically work in three ways. I help increase revenue through operations. I help improve your cost base or build out new capabilities, right? Because I'm a huge change person and innovator at heart, and I love helping people build and do things differently. Hence why my destroying the status quo quote on my profile.
And I did some quick research on your website too. So one of the key things and areas of expertise is transformational change. Transformational change is all about this topic today, right? Is how do you think about transforming your business going into the new year? And what are some of the challenges that come with that particular change? As well as something you coined on your website, which is do more, spend less. And I think that's the key for a lot of businesses, small and large, is how can I get the most out of what I do and squeeze as many of my assets as possible, which is a perfect intro into Reza. Reza has been a close friend of ours for the last couple of years. Reza, talk to us a little bit about what you're doing at Darwynn and your background as well, please.
Sure. Thank you, Imtiaz, and pleasure to meet you, John, as well. And thank you to the audience for joining. So Reza, I've been in operations for my entire career. I've worked with the world's largest retailer, world's largest e-commerce company, helped the third largest retailer in Europe open up several facilities for distribution. And about 5 years ago, we ended up taking the journey on Darwynn. And really the purpose of Darwynn is really to bring the concept of diversification, not only operationally, but logistically to clients across Canada. And Canada is a very unique market. As we all know, it's part of the G7, yet 25 times larger than California. It's got same population and half the GDP. So a lot of brands that want to go national are really paralyzed by the geographic span of the infrastructure that's needed to support either D2C or B2B. And with Darwynn, what we've done over the past few years, we're now just shy of about 300 clients. And that's a testament to what we do, is building a network where any brand, as long as obviously the products are applicable within our ecosystem, not hazmat or not dangerous goods, but if it's applicable to be operated within our facilities, giving brands the infrastructure to not only diversify their geographical footprint, but also through configuration, being able to tap into how they want their business to be serviced. Unlike traditional 3PLs or warehousing partners, we try to take an approach where we're not a sandbox and we say, this is how you need to operate with us. Instead, we've tried to build around configuration and configurability and say, this is the tools in your toolbox. How do you want us to work with you to mold what your business needs to do to diversify? So that's a little bit about Darwynn, a little bit about us, and hopefully I was
Reza,
able
I'd
to answer.
love the first one of the first times we ever met. We asked you a question, which was why the name Darwin, and it actually plays really well into our topic for today. So maybe you can give us a quick understanding of how the name was picked.
Absolutely. I mean, a lot of people misquote Charles Darwin, where he said survival of the fittest. And, we've seen titans of industry from Sears to Toys R Us to Zellers or a ton of organizations where they were really the champions of their industry, and they were the fittest, best infrastructure, best capital. And a lot of people misquote Charles Darwin saying survival of the fittest. He never actually said that. If you actually read the book, he says survival of the most adaptable.
Yes.
At Darwin, even though we've taken a very high degree of focus around technology and modification in our business to meet our clients' requirements, at every step, we want to make sure that we're hyper aware that we're still in the infancy of really what supply chain transformation is. And that mentality for continuous improvement and continuous adaptability is key. And another example I like to use, a lot of people say there's no need to reinvent the wheel, but commerce is changing at such a speed that I don't think wheels are relevant anymore. Like if there's a flood, you don't need a wheel anymore, you need a boat, right? Yeah. So there's so much change happening that I think it's very important for businesses to understand the requirement for being adaptive, and that's at the core of Darwin.
That is so good. I wish I was in my office right now. I've got like the first edition. I'd like bring it out, but it's so true when you think about the fact that people are not anticipating enough, and they're figuring that what I did to get me here is going to be good for the future, without acknowledging the fact, to your point, that hey, that's great that you had that sports car that got you all the way here, but if there's nothing but ocean in front of you, you're done.
Exactly.
So yeah, I love that, man. I'm shamelessly stealing that, so I'm gonna.
Good stuff. Well, as you both elaborated into, it brings us into where we want to be for next year, and adapting to change is extremely important. We know that there is a lot of change that comes year on year, not just from the economy or what's going on within our own ecosystem here in Canada, but there's so many different things that pull in various changes. Geopolitics, things are happening in the US at the moment, new brands that come into the market, like your Sheins and your Temus, your Amazons, that create this whole level of FOMO, in essence, fear of missing out. You almost feel like you need to be doing exactly the same thing everybody else is doing. And I think the approach that you take for your business has to be very, very specific to your needs and what's going on within your own ecosystem. It cannot be it worked for them, so I'm going to really jump into it. So we'll start with trying to really figure out, what does 2025 look like? And obviously, as we are seeing, there's some real big changes happening in the world. McKinsey did a study recently on parcel delivery, and their whole thought process is that by 2025, parcel volume is projected to match mail volume, meaning that this is going to pose an issue for the entire network as we know it when it comes to the shipping world. John, you've been around and in the industry for some decades now. What are you seeing as some of the most significant implications as parcel and mail volumes start to converge on retailers and kind of equal out in terms of what's going on with carrier selection and so on?
So that's got a lot to it. So there's a few things. And I think the first thing that is a myth that everyone holds on to is just kind of assuming that as the volume increases, everything just gets good, right? More volume makes it easier and things like that. And Of course, there's economies of scale, but in logistics, one thing that I try to share everybody is that you very quickly can fall into these diseconomies of scale where you have to start over, whether it's new facilities, new routes, new whatever, you know what I mean? And you build back up till you get that critical mass, and you kind of go through these cycles. The biggest challenge with having, more and more parcel is really when you're thinking about the mail is intentionally and purposely built for the type of product that is very small, very light, could be carried by one person, often on foot, then they moved into community mailboxes and stuff like that. That's where you start getting into the challenge, was like, as that goes away and the revenue that was from that infrastructure, because probably another piece to that, depending if McKinsey got into it or it's been published elsewhere, letter mail is actually significantly more profitable per piece than parcel delivery, right? When you think about how much one person can do over a period of time. And that's the biggest thing that I think people don't appreciate and really value enough about logistics. And I'm sure, Reza, like from a fulfillment side, you see it, but everything really comes down to your capacity, which is how many transactions can I do per hour? And that is really fundamental. And I think that that's what's starting to shift, because if you think about, well, how many individual revenue generating pieces from a mail perspective could I generate per hour? It's significantly higher than what you would do from parcel.
Yeah, absolutely. 100% agree on that. And thank you for that, John. So with what growth Darwynn has seen in a short period of time, Reza, and being a 3PL that doesn't focus on a particular vertical when it comes to our client base, you come across a whole bunch of different types of issues that, or opportunities that come up that need to be solved. We say in logistics, we're born to just solve problems on a day-to-day basis. A day without a problem is a boring day in our world. How do you manage that when you're seeing what's about to come in 2025? And how have you tried to underpin technology to do a lot of the thinking and acting for Darwynn as a brand?
Yeah, so I'll start off with the putting the premise that one of the benefits that we have put together is the fact that we own our technology on the order management side, and that has enabled us to be highly configurable, right? And as a result, we have the privilege of working with 300 entrepreneurs and businesses across Canada, and no two businesses are the same. And through the evolution of our growth, we've had, another privilege and the challenge of realizing that each of these entrepreneurs or these businesses really have their own unique set of requirements. And by having this privilege, by having this opportunity to work under these circumstances, naturally our system has evolved to the point that now we've kind of seen a very wide range of requirements, and being able to take these requirements and really operationally streamline them into a singular activity, or either wave-based activities where they're configured by kind of type of business, has enabled us to really absorb any client and any type of requirement that they have, right? And we've seen it all. We've seen products come in from overseas, unbarcoded, rebarcoded, wrong expiry date, B2B, like you name it, we've done it. And similar to John, I was in the grocery frozen fresh, and that's a very complex segment that most people underestimate the complexity when it comes to fresh frozen and some of the requirements for grocery. But based on the knowledge of the team, based on what we've developed, that has given us the capability to create a lot of adaptation for our customers. And one of the things that we're seeing from a trend perspective, and it's very interesting, and to be honest, it might be a personal note, and I'm seeing it more myself in the past 6 months. We're seeing more and more businesses kind of change their mindset when it comes to cost of operation. And previously, 2, 3, 4 years ago, it was, we'd get on a call with someone in terms of their business requirements, and it was kind of like, what's my picking cost? And that would kind of be a very hyper-focused to what's my picking cost. And we're seeing that transition where more people are realizing total cost of ownership. And that's cost of operations, cost of logistics, cost of headache, right? There's a hidden cost there that, the administrative requirements that really, some of the more traditional players cause in terms of outdated information, not synchronized, expired products, non-compliance. So we're seeing more companies become aware. And I think this, to be honest, I think this Canada Post issue that kind of increased the severity of this, kind of helped bring the requirement for businesses to understand total cost of ownership and take a step back and not look at it in a direct silo, but really look at it in terms of impact on a business perspective. And we're seeing more people become aware of it, asking the right questions. And obviously another trend that we're seeing is the impact on the United States. I think we're going to see some potential shifts, a little bit of an unknown factor, but I think it's a month away, and I think we're seeing a lot of businesses from the United States contacting potential partners in Canada to say, hey, what are my options to go direct in Canada, have my products come in from overseas, and then vice versa. Canadian companies asking us, hey, what's your infrastructure availability in the United States if we wanted to go direct, and kind of vice versa. So you're kind of seeing businesses be a little bit more proactive in potential problem solving of what they think is to come.
For sure. Let's touch on one quick point here, which is the evolution of customer demands and expectations, right? I think what we've seen, especially in the last few years, is the Amazon effect. So how fast can I get it and how cheap is it going to be, because Amazon doesn't charge for shipping. Also, as you mentioned, Reza, when you look at it in silos, you feel like all Amazon's charging you for is, the cost of selling your product or fulfilling it, but there's a whole bunch of costs in there that are being charged to the seller for shipping, logistics, and so on, and mistakes, fines, etc. How have both of you been able to see, and John, maybe we'll start with you, the evolution of what a customer's needs are in 2022, 2023 to what it's going to be in 2025 and what we've just seen this year?
Well, I mean, customers in general, like how much of their needs really changed, right? I mean, it's a pretty simple baseline in terms of, you're making me an offer and I get to choose whether or not I want to have it, right? Obviously, consumers, I think, have been more conditioned, I would say, towards things like speed and just being, just having this belief that shipping should be free, because those are sales tactics, right? Those are different ways to get attention and to sell your product by essentially offering more value, by changing that value proposition to get someone to buy faster. So, I think consumers, and I think that what you're starting to see now more with Amazon allowing scheduled deliveries, you see Best Buy allowing scheduled deliveries, Walmart's going to get into scheduled deliveries. I think the core need, and I've been sharing this now for 4 years, that customers want is certainty. And right, and they want to know what they're going to get, when they're going to get it, and they want you as a provider just to basically do what you say. Right? Like everyone expects every package that they buy to get to them. They expect all of the products to be quality. They don't want to have any issues. They don't want it to be a negative impact. Like those really haven't changed. I think what is really happening though is, like I said, the conditioning of customers, and the danger, in my opinion, in the market, if you're a different retailer or a different brand, is that so many people are allowing someone else who's most likely viewed as one of their competitors to train their customers as to what to expect or what they should want or what they should be able to get. And I think that that's the dangerous thing to this sort of like we can do it too mentality, where you're not taking enough ownership of that customer relationship. You're not intimately connected enough with that customer. So you're essentially adopting or just being burdened by someone else's attempt at a value proposition.
Absolutely. So Reza, before I bring you in on that one, and we'll cover this on the slides to come, but when we talk about the evolution of customer demands, it could be speed, it could be cost, but are you also seeing from a warehousing perspective that clients have several needs now? It's not just a D2C need anymore. They need to get into an Amazon FBA site. They need to get into retailers like Walmart, Best Buy. And with that comes all of these rules and regulations, compliance that needs to be done before these products can go into retail. What are you seeing on your side?
Yeah, I think obviously a bigger breadth of requirement as multi-channel for a lot of brands increases is definitely an ask, especially as brands grow. But one of the things that our focus is to ensure that we recognize that no two sellers really have the same requirements. And to John's point, we don't want to just come out and say, yes, we can do it, right? We want to make sure that we fully understand what those requirements are, be very transparent in our capabilities of what we can service. And based on the configured way the order comes in, either it's a marketplace through Walmart, if it's a FBM, or if it's a direct order, or if it's a B2B order, the right triggers get communicated automatically to the warehouses to be able to operate and really service the clients at their needs. But 100% requirements are increasing. They're becoming a little bit more horizontally wide. And I think it's a great problem for the industry to solve. And I've told you this, MTOs, on the front end, on the customer facing aspect of it, on the marketing, on the sales channel, there's been so much evolution. There's been, stores on Instagram, on TikTok Shop, and this and that, and so many different avenues for brands to be able to put their product in front of the customer. But on the fulfillment and on the logistics side, there hasn't been as much evolution or the speed that's needed to evolve. And also evolution on the storefront can scale at a much faster rate. Every store can go in and deploy a new feature, add a new market channel. But for the warehouses or the logistics partners to be able to execute on those requirements, we haven't seen that speed. I mean, we still have warehouses that are operating on Excel forms. We have warehouses that are operating on an abacus, right? They're kind of counting inventory, kind of left, right, and center, right? And then how do you evolve that industry to be able to kind of mirror the speed that the front end is growing at? I think it's going to be a challenge for the industry and a great opportunity for the ones that are willing to evolve.
Thank you. That makes a lot of sense. So with that being said, let's move on to our next slide, which is really around how to deal with some of these changes, challenges, opportunities that will be coming in the next few years to come, right? What does diversification mean? So I think one of the points, Reza, you made early into the postal strike was about putting all your eggs in one basket, and I really liked it because you had these variations of how to cook your egg, which was pretty cool. By the way, just to put this out there, and a lot of people will attest to this, I do make the best eggs around. With that being said, when you look at an investment portfolio, you don't put all your money into one particular stock. You look for a diversified portfolio. John and I were discussing yesterday when you look to do a particular type of activity, let's say you're flying and going on holiday or whatever it may be, you're always looking for the best deal. You want to try and compare and contrast between what's the best out there before you can choose it. And the reason we can do that is because platforms like Expedia and so on have made it so simple for us to be able to have a diverse view on what's around before we make a really knowledgeable choice. With that being said, some of the key things that are going to be coming into 2025 creates this real importance to ensuring that you are one step ahead, that you have evolved or adapted, and you are thinking about how you're going to be able to manage these challenges, opportunities, changes, as we mentioned earlier. So a couple of things that really come to mind are around carrier capacity constraints. So we all see that during peak seasons or even during natural disasters, things that put the country at a stop for a particular time. We saw this, a couple of years ago with forest fires. We saw them with the BC floods. And there was a real need to ensure that you had a variety of solutions available to you quickly, so you could quickly move on and get that expectation that your customer had to receive your product on time. You could exceed those expectations or at least meet those expectations. So we've seen the capacity constraints, we've seen disruptions regionally, and then we've also seen technical failures. We've seen, one of I guess the biggest things that we recently saw was the boxing fight. If any one of you watched Jake Paul and
Netflix,
Mike
yeah.
Tyson, right? There was some level of technical failure there with a huge conglomerate like Netflix. This happens in our day to day. I heard WhatsApp was down a couple of days ago for a few hours, etc. So, with that being said, what are the ways you feel we could really approach diversification when these type of things happen? What do you see are some of the right things people are doing today?
So I want to make I want to add a caveat there. I think there's diversification is critical for any business, but there's also a risk of over diversification as well, right? And I think, and I'll provide one example, right? If a company wants to, manage their fulfillment and logistics across Canada, and they decide to over diversify and go with 3 different fulfillment partners, right? And each fulfillment partner has different integrations with different carriers, different pricing mechanisms, different account managers, different billing systems. Then you need a whole administrative infrastructure to be able to handle the requirements, and the inventory of all 3 are not in sync, which causes huge production issues as well. So I think there's always a risk of over diversification as well. But I think the right level of diversification is kind of this very nice balancing act, and it's going to change as organizations evolve and different states of the maturity of their organization as well. Every company, like a human, goes through multiple phases, right? And there's going to be this phase where reacting too fast might actually cause another risk to an organization. But I think companies need to look at the right partners where they can tap in to a breadth of carrier ecosystems, and making sure that knowledge can also be communicated to the end consumer. And MTOs, we've worked together in the past, and how we operate. Every client that we onboard, we're very carrier agnostic, right? Yeah. With some exceptions, but we open up our portfolio and we actually provide the pros and cons of every single carrier, and we let the seller actually decide, what do you want? This is the services they offer, this is the overnight, this is the pricing, this is where you will sit. And instead of Darwynn becoming the one that kind of guides that conversation and says, this is what we recommend, we actually provide a menu and say, this is the solution, pick and choose based on the requirements of your business. And I think there's a balancing act for diversification. I think over diversification is definitely a risk. Same way that uncontrolled growth is more dangerous than a pitfall, right? But yeah.
You touched on some really key points there. And before I bring John in, let's break those out a little bit, because I think it will really help with how we'd like to have John even approach it. You talked about over diversification. You talked about understanding or providing enough of an understanding to the client for them to be able to make the right choice and the right decision. And I think one thing that both John, Reza, and myself have in common is this consultative approach. As a business, John and I were discussing this yesterday, where there is a whole bunch of adaptations we have taken on as a business that we were kind of bringing John up to speed on. Was number one, as you mentioned, Reza, that consultative approach of ensuring that you understand their needs before giving them the right approach, strength, pros and cons, strengths and weaknesses, is key. If you don't understand the business of your customer, there's no way you can approach it the right way. The second thing John and I discussed yesterday was engaging above and beyond, not just kind of saying, here's a rate card and this is what I think, but really understanding that Canada is a huge region. It's a huge country with multiple regions that have multiple different challenges of their own. And then number 3 is how you bring together, as John, you mentioned earlier, keeping it really clear and concise, doing what you say you're going to do, and providing that level of information that at any one time I can see where my shipment is, this advanced tracking milestones, being able to actually be able to see that, hey, eShipper received my shipment. It's now with the carrier. I know it's in the air, for example, and I know it's now received at destination airport. So that consultative approach to ensuring that it's not just a rate card, but it's the end-to-end. I'm going to almost educate you on what's available to you and based on your needs, to implementation of the solution, and then this entire post-sales support to ensure you do it the right way before I leave you to your own and you carry on as business as usual. John, talk to us a little bit about how you're seeing that really come to fruition with some of the clients that you speak to on a day-to-day basis.
Yeah, for sure. First, I agree 100% with Reza in the fact that, I think carrier diversification has been a bit of a buzzword. I think a lot of people have leaned on it to, engage with shippers. And it's like a pendulum, right? At one point, it was very difficult to do a lot of integrations. It was hard. You have to big RFPs, sort of your account departments, everything like that, getting everyone set up. Now, these days, you go onto a platform, you click yes, and you can have access to 30, 40, 50 carriers. I can tell you from sitting on the shipper side of the table, I was never, not once in 15 years, in a meeting where someone wanted the 101st carrier. Like, you know what I mean? That is not a good strategy. If you're just diluting your business, you're diluting the value that you're getting into it. Because to your previous slide, the most important thing that there's two things that people need to remember about diversification. You had them listed, but just to make it clear, one, it is about mitigating risk, right? Like that's why you diversify, not having your eggs in one basket. So for sure that's a piece. But the real value of carrier diversification and the real reason you should be doing it is because, let's be honest, your operations is so you can execute your sales, right? You have to be a sales enabler, and your diversification strategy should be in a way that aligns to make sure that I'm going to stack all of my gains and I'm going to put these pieces together in the way that helps me win and be the most effective that I can be, because it's highly unlikely that one partner alone is going to be able to do everything for you in every way, under every situation, for every customer. So that's where you want to be very strategic and mindful. And that's honestly where I spend a lot of my time working with clients, is because, to your point, you want to find that right balance. You need to evaluate, you need to understand. Everyone is going to tell you they're the best. I never sat on one call where I picked up the phone from someone that wanted to service me as when I was a shipper, and said, hey, I'd love to work with you. I'm kind of average. I suck sometimes. Like this person doesn't exist. Every phone call you get is, we're the best. We have the best lanes, the best prices, the best quality, the best people. Everyone's the best. There isn't one person out there who won't tell you they're the best. So I spend a lot of my time helping my clients really understand, okay, what are people actually offering? Does it seem like what they're saying makes sense? Are they really as strong as what they have? And, we push them. Like I'm a disaster to deal with in those meetings. It's like, show me your routes. Show me how many people you have. Show me your warehouses. Show me when you leave. And the more that someone can do that, you get a sense of their credibility and their real infrastructure. And you very quickly find out where that starts to fall apart. But that is why it's so important, because if you over diversify, or if you pick the wrong partners, not only are you wasting, all kinds of time and probably millions of dollars in integration and all kinds of other issues, you're immediately impacting your customer experience, and you essentially go back to square one, because now you got to find the right partner again. So all of that, everything that was done is just been a huge waste. So, how you select the people, how you make sure that you're getting the right type of service providers that are really going to be partners for your business, that really understand it. That's why when Reza says, like, provided their product fits and provided it's the right type of solution for us, that takes a lot of assuredness in your own business and stuff like that, to be like, hey, I'm really great with these clients. These ones here, maybe they're not for me, or the way that they work is not the right type of thing for me. But the more that you can say that, means that those people will find the right people that have really sort of doubled down for that type of business. Whereas you can feel more comfortable when that person is like, no, like, you're for me. I've intentionally built this way, and this is the way that we work, and here's how we add more value to it. So that really, for me, is the differentiator when you're talking about like a lazy diversification, which is just I'll call it even a point and click thing these days, versus, being very intentional and purposeful with what you're building and why you're building it the way that you are.
Absolutely. Thank you, John. So we'll touch on this slide a little bit more, just to talk a little bit about some of the things to bear in mind when you're looking at how to evaluate your next steps coming into different carriers that are able to support you or provide you with a service. So the first, as I think Reza had also mentioned, was the product assessment, right? What is your actual mix of products, and is it fit for purpose for that particular type of carrier? John, you mentioned this earlier. The mail service is built more around light stuff, small stuff, things that people can hold, potentially walk with, etc. Geographic consideration. So, location density mapping, just in the sense of, John, I know you do this very, very often. You live in data. Reza and I have done this quite often with some of our customers too, which is around understanding where are your current customers actually shipping or buying from, for example, and who are the right partners to have in those particular regions. And is it worth having multiple partners there? Or, as you mentioned earlier, don't dilute the service level. Let's set one good partner, an ultimate primary partner who can deliver, and always have a secondary option if we see things falling down. Obviously, technology underpins this entire movement, right? You cannot have a bunch of different suppliers or more options if you don't have technology to streamline and bring that all together. And we'll talk about technology in the next few slides. But how important have you seen support as customer service, post sales, tracking updates, claims management? How important has that been when it comes to choosing the right type of carrier? And how would you measure that, John?
Yeah, there's a few things, right? I mean, I think that salespeople are really great at looking sales data, and marketing people are really great at looking at marketing data. And operational people, when they can really use that data and give it back to the business, add a ton of value back in, right? We look at it a different way, and we really understand it. One thing that I caution people with thinking is that everyone will talk about their ICP. Everyone's got their ideal client profile. They want to chase it whenever. Almost no one will chase what I call the MRP, which is your most representative profile, which is really understanding like what is actually driving your business today, and that profile of the customer and what they need. Is that aligned to your ICP or not? It may or may not. You may actually find that your MRP is a better type of client than who you're chasing, but you then have to understand like what's happening today in my network, and how closely is this aligned, and how well does it fit with my strategy, where I want to go, the type of growth we want to see from our business. So to your point, technology for me is about being able to dramatically increase and improve transparency and understanding, right? Everyone can have information, like getting data and recording something is no longer hard. Like you can record data on anything, but taking that data and changing it and making it knowledge, and then being able to take action from that information that has been transformed that way, that's what's really important. And those types of providers that can be stickier, that can be more ingrained, that can be more understanding, have that higher business acumen with the brands and the clients they serve, those are true partners versus someone who's just very transactional and not really paying much attention to what's going on other than the next number that comes up on the screen.
For sure. Reza, you have some really strong experience in post-sales support and dealing with clients on a day-to-day basis, dealing with multiple suppliers. I know we are moving quite fast in terms of time, so we're already at 12:40. So give us your quick synopsis on what post-sales support should look like, and if there's anything you want to touch on the technology side as well.
Yeah, from a Darwynn perspective, we have a very unique perspective on post sales, and I start that by saying the most important factor is something that John kind of alluded to, is making sure that we understand it's the right customer for our business. And we put an obscene amount of focus on the initial onboarding for the client, making sure we understand their business, making sure we understand the configuration of even how their items are set up, because a small iteration in how a master data is set up has a ripple effect through the chain of dependent variables in how that data is communicated, how the invoicing happens, how the pricing happens, how the operational complexity within the business happens. And from a Darwynn perspective, believe it or not, a lot of people think we're crazy when we say this, but our motto is that the best customer service is no customer service. We do such a good job, the customer doesn't call us. Now, that doesn't mean we don't have customer service. We're not perfect, and we recognize that. But that is our aspiration, to understand the root cause of why customer service inquiries come in. And internally, John, you've probably heard the example of the spaceship and the horse's rear end, kind of the 5 whys on how the spaceship can't go through the tunnel because of it's a comical story about root cause analysis. I'll actually share it with you, MTS, if you want to put it in this chat for everyone. But we really try to understand what the root cause of a problem is. Why did the client call? What was it a carrier setup issue? Was it an invoicing issue? Was it a transparency issue? Was it a visibility issue? Was it a mispick, an operational issue? And we try to fix that problem at the core, not just go in and be like, let's correct the inventory and correct it for the customer, but really, was it a training issue operationally? Was it a onboarding issue where we didn't understand the client's requirements in the initial sales discussion? And we try to eliminate post go live support by having a very well thought out onboarding experience, to the point that most customers actually usually within the first or second week after post go live, they're like, all right, we're good. We don't need to have any more calls. We're comfortable. We're trained. We have all the training material. We have all the videos. If we run into a problem, we provide it. Here's a ticket. How you can kind of proceed with that. So I think from a post go live, I think any company that any provider that you face, if they don't take the time to really understand your business and just shoot a rate card from the hip, I think there are just causes for concern. Not saying that it's definitely going to be a poor outcome, but I think no two businesses are the same. You want to make sure that you find a partner that really understands the inner workings of your business, how much you operate, what's your turnover, how many SKUs do you have, what's your plans, what's your future growth plans, to make sure that the rate card, the systems, the process that they recommend back to you in terms of availability match not only your current needs, but your future needs, to eliminate the continuous mindset of post go live support. And I think I want to add to the last point is, when we're talking about total cost of ownership, bringing it back to my initial comment, post go live support could mean indefinitely, right? If it's not done properly. And that indefinite component is a significant liability for organizations because it requires human intervention. And if there's ever changeover and within those organizations, depending on the sheer size and the complexity of the relationship between those two partners, any change can result in a detrimental impact to not only the end customer's experience, but the reputation of both partners involved, the 3PL and the brand that's being represented. So I'll end it off there because I'll probably end up nerding out too much.
Thank you. Thanks, Reza. So we've got 2 really good slides coming along, and we want to make sure we get to the questions because I'm seeing a lot of questions come up as well. So what is the role of technology in carrier diversification? And I think here comes down some of the key elements of looking at diversification through partnerships or looking at diversification through your own business. How well does your technology need to be able to work in order to be able to have diversity in your supply chain and have solutions to mitigate risks, solutions to help you get even faster, better services, more cost competitive services, etc. Do you invest in technology yourself, or do you look at partners who already have that level of technology and try and work with that right partner who can give it all to you? And giving it all to you could be relative to your needs and who you are and what your needs are as an organization. But how have you found technology has really enabled the ability for Darwynn as a brand to be able to have multiple different solutions to the customer, and to enable the ability for even Darwynn to bring on all of these different types of customers? Because it's one thing to be able to prep and pack their product and get it out for delivery, but it's also another point, especially, Reza, I know you personally look at every single comment from your customer, look at every single issue customer raises, and almost dive into each one because you want to understand it and you want to solve it, right? How has that been so important to you from a shipping perspective? Because when it comes to carrier diversification, Darwynn works with a multitude of carriers, multitude of partners. How has that technology allowed you to do so? And How much have you had to invest in it?
So you're 100% correct. Every single one of my customers has my direct cell phone. I think you know this, MTOs. I've purposely told them that if their issue is not solved, I want to know about it, and to be able to really dive deep into the problem. You're 100% correct. It's who I am and what I like to do, because again, it goes back to our model that the best customer service is no customer service. Making sure that I fully understand where those issues are. And we have invested a fair bit in technology, not only in terms of tracking internally what the root causes of the operations are, what categories they fall under, what issues are we having by carrier, what are the main types of issues that we're having by carrier, by customer, by product category, because sometimes it's specific products that don't fit within a specific carrier system, or there's specific lanes that are impacted. By having this, it's enabled us to be hyper configurable in terms of kind of the chessboard that we lay out to make sure that we defend our position of our customer being the king. The customer is always the king. So we move pieces around by either removing FSAs by areas that we see that a specific carrier is impacted, either longer lead times or incapable of handling specific product groups. And so we've built a lot of technology in the decision making of how that logic is constantly making decisions after the customer sets its parameters. So the customer comes in and joins Darwynn and says, I'm okay with these 17 out of 35 carriers that you have. And we're like, great. What's your second top category? Second top category, I want SLAs to be under 5 days. What's your third category? I want it to be net neutral or electric delivery. Then I want the best price. So we've set up this logic, this pyramid-based logic of decision-making, this hierarchical decision-making. And then in the back end, we have control over the FSAs that those carriers can handle, the different capabilities that they have, the recommendation of product category linking in terms of prioritization based on those carriers. And we work on identifying the right pairs. It's kind of like a live matchmaking between product, customer requirement, and carrier availability to link the customers, ensuring the best price for those clients or ensuring the most sustainable outcome for them. And I think there's a whole conversation around, I see some comments around sustainability and I obviously have my thoughts there, but I hope I answered your question in terms of the role of technology.
Before we bring John into some of these questions, Reza, I want to maybe tie it all together really quickly for the audience as to how does Darwynn as a business take advantage of this multi-carrier approach within a partnership like eShipper? And let's maybe delve into, as you mentioned earlier, the rate card at the hip and just giving you whatever we have available. Maybe start at pre-sales, implementation, post-sales. Give us an example of how your business has been able to lean on a partner to be able to get a multifaceted solution, whether it be D2C or B2B. And also why, as an organization, you've needed to diversify yourself with other partners outside of eShipper, because I think this brings everything together for a customer or a prospective business that's thinking about this as to how it's being done today.
Yeah, I mean, if I look at it from the life cycle or journey of a customer, during the sales cycle, we clearly try to understand the client's portfolio, understanding which position within the Canadian market they want Darwynn to service them. Is it one location? Is it multiple locations? And currently we have a footprint of 9 facilities across Canada, across 4 provinces, and expanding. So we first try to really understand the requirements of the customer and what makes sense for them. Is it more of a B2B business? Is it more of a B2C business? What are really the outcomes and the future aspirations of that client? Based on there, we have competitive advantages that are both national and regional, depending on the province that we're operating in. So there's some carriers that are very regional, some carriers that are very national, some carriers that are hyper local within a specific area, and really start providing a unique competitive advantage from there. Obviously, eShipper is one of the different ecosystems that Darwynn taps into on occasion, and you guys have exclusive relationships with some carriers. And then we have our own relationships and other partners as well. So depending on what the client wants, we walk them through kind of our capabilities and our ecosystems that we have available to within the Darwynn umbrella. And from there, we enable it, we configure it, we make sure that their master data is live, and that is linked and synced nationally. So once you're live in the Darwynn ecosystem, you're actually live across the country. Unlike most of the current partners where you need to onboard in the West Coast and then onboard another ecosystem on the East Coast, so you have kind of like within the same company two different accounts. With Darwynn, you're national. That configuration is built nationally. And sometimes specific carriers, even within, we'll just say carrier X, it might make sense that they are operational for the client just out of Ontario, but not out of BC, just because of the way the rate card plays out and the way the requirements of that client is, or based on the order portfolio, right? Sometimes it's larger orders are leaving on the East Coast versus on the West Coast, it's smaller e-com all the way to Ontario, or however we set up that configurability. Then we work with a client, and the role of diversification from a carrier perspective. As I mentioned, we're carrier agnostic. We're onboarding carriers on kind of like a monthly basis, one after another, depending, again, if they can meet the needs of our customers. Every carrier that we onboard, we notify usually one or two potential pilot clients where we're like, hey, do you want to test this with us? It's going to be an exclusive price for a short period of time. We kind of fit them, we marry them, we build that relationship, we go live with them. And if they're successful, then we enable that success to be available for the rest of our customers, based on that logical pyramid-based decision-making of how the hierarchy of, it's kind of like the Maslow's important factors, you first want sheltering, you second want this. It's kind of the setup that we do for the client. What's the bare minimum for you, right? The bare minimum is I want my order delivered. Okay, well, second one is I want the lowest cost. Okay, so speed is not important. Cost is more important than speed, right? Like we go through that decision making for them for that logical flow to come out with the best recommendation based on the portfolio carriers. And to me, I might have a business that I'm selling hats and I just want lowest cost. And I don't care if the shipping is 2 weeks, right? I just want the delivery to be $3 or $4, right? And then John might be selling, honey, mined from the, corners of the Himalayan mountain that, is like $200 a jar, right? And he wants fragile. He wants to make sure the product is protected. He wants to make sure signature is there, and he wants to make sure that it's 2 days anywhere across Canada. These are completely two different businesses, right? And how that decision is made logically, operationally, and logistically, I think require a high level of configurability and diversification. No, not a single system in Canada can manage it if it's kind of like, here's our path. It needs to be here's this tree of decisions. Which one is your path?
And to touch on a couple of last things, I think from a technology perspective, the idea of once you've chosen what you've chosen, just getting that level of automation based on rules allows you to then go focus on what you're really good at, is grow the business and not so much day-to-day managing manual processes. And then once you get past that and you've got your customers receiving their products or complaining about not receiving their products, having the technology to bring it all together really quickly at a snap of a finger, and being able to see it in a nice presentable format to make the right decisions going forwards. I've really enjoyed this, guys. So unfortunately, we only have a few minutes left, and I want to touch on some of these questions that have come in. So we're going to go real snap fire chat, if you guys don't mind, okay? So quick question for you, John, is what do you see as the biggest technology advancements in logistics that companies should adopt today?
I honestly think that the biggest thing to do is being able to have sort of centralized data views and really understanding how their performance is at any given time, right? Like, getting reports or whatever that tells you everything's good, but it's like, how quickly can your attention be put to the yellows and to the reds so that where those decisions need to be made? Because I feel that customer experience and your operational execution is only going to become more and more popular as social commerce goes on the rise. So, being able to quickly understand what is your current state and what is going on is probably the biggest thing that I think people should be focusing in on with their information, their data, and their technology.
Yeah, and we talked about data really quickly in our earlier chats, and I think one of the tools that people should be looking at more of is tools that are going to give them data based on their perspective, like their rules. So, for example, we use Power BI, and we create our data based on SLAs from when a particular shipment left our facility to when it got delivered to the customer's front door. It's no good if you're giving me a parcel that was a label was created 3 days ago, then fulfilled, and then delivered, and your SLAs are all over the place. So really specifying what you're looking for, and we'll touch on that more and more during these sessions next year. Next question we have are what are some of the low cost, low risk changes that a company can make to get started with carrier diversification? John, we'll go back to you on this one too.
So the first one is the easiest one, is that honestly, I think taking what you're doing today, doing some analysis and making a decision, but test and try a change and make a different type of move than what you might have been doing that's specifically tied to your strategy or to some goals that you want to achieve, and understand really what it takes to make that happen, right? Because I think that once any business, small, large, whatever, goes through those changes and understands, like, here's how I play with the levers and here's the results, it gives them better understanding, more context, and it gives them more confidence to do things on a larger scale that will obviously have bigger benefits for the business.
Thank you. Reza, quick one for you. So Canada's fast evolving market, shipping costs remain a challenge due to the widely dispersed population. Do you think logistics companies are effectively addressing this by developing solutions to better connect the East and the West while keeping costs manageable?
I think that's a fully loaded question, and I could provide a lot of context, but at a high level, I don't think it's just the responsibility of shipping companies. I think it's also the responsibility of companies, warehousing and fulfillment. I mean, that's one of the goals that Darwynn has, is to help alleviate some of the pain points. And I mentioned it earlier. Canada's a very vast country. I think we don't understand the sheer size of it sometimes. From Vancouver to Toronto, just for context, is a greater distance than from Lisbon, Portugal to Moscow, Russia. But that's just 1.5 billion people, and we're like barely crossing 35 million people on this straight line. So I think putting the entire onus on shipping companies puts it at a unrealistic requirement. I think the responsibility lines with a magnitude of different partners involved at a handshake point, which includes not only the warehouse and fulfillment partner, the shipping companies, but also the brands, ensuring that they are managing their businesses nationally with a national mindset and ensuring that they're making the right promises to the clients without over-promising or over-committing to it. I think it's the responsibility of a magnitude of different partners involved. But I think overall, I think Canada is evolving, given the challenges that it has, the sheer size of it. I think it's doing a fairly good job adapting to the requirements of direct to consumer.
Agreed. And I think to the point Ahmed was trying to make there, and to your point as well, Reza, I think there are solutions now available to create faster transit time between the East and the West in terms of costs that are comparable to what you would pay by ground. And I think that's where a big focus and development will probably occur, is how to get faster, cheaper, or how to get faster, more cost effectively. And those solutions are being used by some of Darwynn's customers already today, taking advantage of keeping inventory in one place as opposed to multiple areas. But I definitely agree with you. It is also, there is a big onus and responsibility on the rest of the ecosystem to do its part. And the handshake is extremely important. I think that's where technology, tracking, pro sales really comes together. We'll spend time on one last question. Do you think businesses still need multiple warehouses and split inventory when there are zone skipping services available? Maybe it is product dependent. Maybe the lighter weights can get away with it because of the shipping cost of air being a little bit less. But then on the heavier packages, foldable mattresses, things like that, where it's a large e-commerce product. Do you think, from where you are, Reza, every single customer needs to have multiple warehouses, or are you seeing this level of zone skipping coming in and helping that solution in terms of transit time and cost?
I think it really depends on the business portfolio and the warehousing partner. So if you go deal with a warehousing partner that says, hey, you want to use multiple locations, the minimum monthly bill is $15,000 with a 6-month termination, I think that becomes ridiculous and unmanageable. Having the right partner that allows you to tap into facilities to be able to kind of grow as you need to evolve, I think that's a very critical component. But it also really depends on product portfolio. And I'll provide the example of, say, a peanut butter company. Imagine, John has a peanut butter company. He might have 6 different flavors. He might have 12. He might go absolutely crazy at next year, create 24 different flavors and 3 configurations of sizes. But on the other side of the equation, MTS, you might start an apparel brand. You might have 50 designs, maybe male and female gender, 5 colors, 5 sizes. All of a sudden, your assortment explodes to multiple thousands. And for you to manage your inventory across a multi-facility network, where on a shipping cost, a parcel shipping cost, the impact of shipping is significantly less versus cases of peanut butter that are, kind of like solid liquid products that are heavy. I think it really depends on the business where they have to use multiple facilities or not. And it really depends on the partners that you have. In a country like Canada, as you go business to business, I think the importance of multi-facility becomes more and more important. Yeah. And as soon as you go higher degrees of e-commerce, I think it is important to have one on the west and one on the east. But there might be limitations based on how your business is set up in terms of assortment and future growth.
Yeah, and thank you for your insight, because I think you being in that world really helps to understand why size, weight, and dimensions matter when it comes to multiple facilities versus one. But I think that's the key, is as to how diverse you have in terms of your solution set. You could have the choice. Some people don't have the choice. They can't do one or the other because they're so restricted on what's available to them. That being said, guys, it is 1 p.m. and you guys have done a phenomenal job just being around me for this long. So thank you so much for tuning in. I want to thank, obviously, all the audience that joined us today and will be watching this over the next few days. John, Reza, you guys have been fantastic. Thank you so much for sharing your own insights. Absolutely what I had expected from both of you. With that being said, John, can I ask you maybe for some closing statements on what your thoughts are in kind of the next year?
Yeah, I think it's important for everybody to really be paying attention to the trends and seeing what it is. A lot of people will look at Canada and the US in particular, and think that they're at the leading edge of e-commerce. The reality is there's a lot of things happening, for example, in worlds like China, like in countries like China, for example, that are far ahead in terms of what the integration is between businesses and consumers and things like that. I caution everybody to pay a lot of attention towards social commerce, social selling, and the attention economy. I really think that that's going to dramatically shift the way that you, not just that you sell, but the way that product moves through the system. You're going to see a lot more, peaking and valleying. You're going to see a lot more virality and then nothingness out of products as people continue to want to have those discovery stories and share them on social media. And that's really going to change, I think, the way that a lot of people have been doing sales. And I think it's going to have an impact for our industry when you think of, traditional big manufacturing, big batch, and continue to push versus, smaller runs, in and out products, seasonal, or, kind of drop culture style stuff. I think is going to have a lot of momentum going forward, 2025 and beyond.
Thank you very, very much, both of you and our audience, for tuning in today. It's been a really educational session, and I hope we can do more of these in the future. Thank you again. Have a great Christmas and holiday if we don't see each other again. And to the audience, good luck to you. 2025 is going to be an epic year. A lot of new things coming into the industry, and we really look forward to working with each one of you. Thank you so much, and take care.